Good morning, Steve Reed in Chicago with the morning grain comments. Well, welcome to March. I think things might get a little bit more interesting, especially at the end of March, depending upon the kind of weather scenarios we're looking at down the road for the U.S. Midwest and also parts of the Black Sea. For now, I think looking back to January and February, the number one thing that we could probably say is that the weather globally improved. And so we're less concerned about what's going on in South America, although a few people are watching the weather in Brazil for the end of their second safrinha corn crop development. But really no problems in Europe, no real problems in the Black Sea yet, no problems in China. India's had a less than normal winter, but overall the markets really aren't trading any weather premium in much of the markets. We are seeing that the crude oil market continues to firm up a little bit on talk of China buying. That offsets the build of stocks here in the U.S. We're also seeing a couple markets like cocoa and cotton that have surged higher. Not a lot of reasons why the cocoa market is up where it is, but the cotton market, it could be watching pretty closely demand, especially out of China. China continues to try to find stimuluses to help their economy, but so far their economy remains stagnant at best. We can also look back at the USDA reports and find that most of the reports were negative. And so when we go look ahead in March, we'll have a March 8th USDA supply and demand in which there's a tendency for them to adjust South American crop numbers. And so we'll see if they lower Brazil's corn and soybean numbers and what impact that might have on world supply and demand. There's also the end of March, March 28th, we'll have our first planting intentions here in the U.S. and March 1 stocks. Again, corn stocks should be high, bean stocks might be a little bit tighter, wheat stocks also might be a little tighter. And so we'll have to kind of see what the intentions are as far as farmers' planting ratio between corn and soybeans and what they're going to plant in spring wheat. And so, again, our weather guy thinks that the U.S. Summer, Midwest, especially West Corn Belt, might be a little bit drier than normal. And yesterday or the other day, he put out a special report that some of the analog years even has warmer than normal temperatures. Right now the drought index is probably better than it was a year ago at this time, except for parts of Iowa and Wisconsin and maybe northern Illinois. So in general, we're looking at a choppy trade. Beans up about 5 cents into May, corn's down a penny, while wheat's down 4 cents. Outside market stocks are mixed. The dollar is a little bit lower and crude is higher.